Today is Thursday, June 1st of 2023. So we'll start with our small option trading account. Here you see that overnight the TSN June 16th $57.50 cash secure put options were assigned to us. They had gone deep in the money on us. And so today we sold to open the TSN October 20th $55 covered call option and pocketed $1.82 per share. So I want to point out a few things. So first of all, we were assigned this at $57.50, but we did receive some nice premium when we sold that cash secure put option. So our actual overall out-of-pocket cost is less than $57.50. I looked at where it was. It was right around $55. I think it was a little bit over $55 where our break even is. So I just decided if we sold this call option, by the time we pocket this $1.82, then if it is called away from us at 55, we will walk away with an overall profit. And that's on a position that's gone against us. Tyson had a big drop. Going back here to May 5th, it was down right at, looks like about 22%. So the fact that we can get out of this with a profit, if it's called away from us at 55 in October, is actually pretty remarkable. So that's one of the nice things like about options, that they can really help you when a position goes against you. If you trade long enough, you will have positions go against you. Now let's move on to the main option trading account. And we had the same thing happen in our main option trading account. The Tyson cash secure put options were assigned to us at 57.5. Now we'd already sold some covered calls in Tyson. And we actually, if I zoom in here, you see that right here at this $50 area, that's where we sold some short call options. So now we own the stock. So we were in a cash secure put option as well as a bearish call credit spread. But now that we own the stock, now we're just in a covered call position. And we'll just see how it progresses over the next few weeks. We have a couple weeks before those options expire, 2 weeks from tomorrow. And so we'll see where it's at here in the next week or two, and we'll adjust that covered call accordingly. I'm not opposed to selling the shares and going back into a cash secure put option and keeping a bearish call credit spread. But at this point, I'm going to leave it alone and we'll stay with the covered call, and I'll adjust it the next week or two. The next position is a new one. It's HPQ. This was a position we were in like a month or two ago, and then we closed it out to avoid earnings. And now HPQ is back in a position I like, so I'll talk you through why we did this trade. So we sold to open the HPQ July 21st $28 cash secure put option, got 66 cents per share. And just in case, we went ahead and bought some protection, bought the same expiration day 22 put option for 4 cents per share. So pocketed a net of 66 cents per share for this bullish put credit spread position. So here we'll pull our chart up. So notice that HPQ has been in a nice overall uptrend on this daily chart. And it goes all the way back here to November, to the fall of last year. And it's making higher highs. You see here, multiple higher highs, 1, 2, 3 higher highs, making higher lows, 1, 2, 3, 4. It's been in the process of making this fourth one here. What's interesting is that after earnings, there's a tremendous amount of volume yesterday. Which is a really high volume, the highest volume we've seen since going all the way back here to September. More likely, I didn't look, but that quite possibly may have been an earnings announcement as well. Might not have been, I don't know, kind of speculating there. But notice that after the earnings announcement, HPQ, it was, before that earnings announcement, it was at the top part of this trading channel and immediately dropped down to the lower portion. So now we're back down the lower area, and when sellers came in and pushed it down, buyers bought it back up some, but couldn't get it close to the top, or definitely couldn't fill this gap. So we do have a gap here. Notice that we have a gap right here, filled a few days later. So we have another down gap here. Took it, how many days did it take it to fill it? Looks like it took it about 22 days to fill that gap. So we see it does tend to, HPQ, it does tend to fill gaps. So we'll have to see when this gap is filled. But nice high volume over the past couple of days. It found support right here in the area around 28.80. About $29. This same area that served as support for it several weeks back. Then going back to the end of April, served as support for it there. A couple times back over here. But what we did is we went even below that. We went to just right at this upward sloping trading channel, the lower portion of that, the support area. That's where we sold this $28 cash secure put option. I would like to add this position. It'd be great if HPQ came down a little bit more, and in which case we get more premium. But I'm happy with what we got, and now we'll see if we have an opportunity to add this position. Looking over here at this weekly chart, see that the 200 moving average on this weekly chart, exponential moving average, is just below our $28 strike price. It's right there, right around $27.70, $27.80. So if HPQ does come back down, that's another area that quite possibly will serve as support for it, that red 200 exponential moving average. Again, we hope to add this position. We'll see how it goes over the next couple trading days. And finally, INTC. So we have a cash secured put option in Intel. We didn't do anything with that. This trade today was primarily on the shares that we own in the covered call portion of our Intel position. So notice what we did. We sold the 500 shares of Intel that we own. It says 100, but we did 5 of them. So we sold the 500 shares of Intel that we own, and then we bought in its place the January of 24, so less than a year. It was like about 8 or 9 months out, 8 months out. We bought the January 24 deep in the money $15 call option. See it right here, the call option. That cost us $16.71 per share. Let me show you why I did that. Now first, the first reason is that Intel decreases dividend by a lot. So the dividend is next to nothing. It's less than 2% of its current stock price. So basically next to nothing, not worth owning the stock because of that dividend. So we can get nice interest on our money. So why not get rid of the shares so we could sell for $31 and buy the call option that does the same thing for half that, for $14.56. So what we did is we're now in a position where this call option, its delta is really high. It's in the 90s. I believe it's over 95. So for every dollar that Intel goes up, this call option's value should go up by at least 95 cents. And if it goes down, then of course the value of this call option will also go down by about 95 cents. But keep in mind that it's at the $15 strike price. So we actually do have some protection. If we switch over here to this long time frame, if Intel were to drop down to 15, that's actually, we wouldn't lose any more than that. Whereas if Intel were to drop below 15 and we own the stock, well, we could keep losing money. So in doing this, we are paying a little bit of extrinsic value. It's not much. That's why I only went out to the 24, the January 24 call option. If I went out to January 25, I believe it was around 80 cents per share in extrinsic value. So I didn't want to pay that much time value. If I remember correctly, with the January 24 call option, it was around 30 cents. At most, it was 39 cents. So somewhere in there. So we're not paying much in extrinsic value. With the options we're going to sell against this call option, we should be able to more than make up for the extrinsic value we pay this option. So we have some protection because our call option stops at 15. And even if Intel were to drop to 15, this January 24 call option, unless it was right at expiration day, it would still have some value. Whereas if we own the stock, we'd lose dollar for dollar as Intel drops. So I believe it's a good position and frees us up some capital to get some more interest on our account. So that's our trades for today. We'll of course look for a few more opportunities tomorrow, the last trading day of the week, and I hope you have a great evening.